Right, hey, this is Scotty from the Gifford Group, and today I wanted to do a little update for our capital gains calculator that we have on the giffordgroup.net. So, if you want to check out our capital gains calculator, if you are in the process of selling a home or you've sold a home and you're wondering how much capital gains you will be owing, this calculator will help you answer that in the video. So you can go to if you go to our resources, then go to the capital gains calculator. You'll see our old video that I recorded about a year ago, and I've made some changes to the calculator. Hopefully, made it a little bit more easy, and I've added some complexity to it. If you are an investor or you're really worried about what your tax rate you will be in because of capital gains, so the calculator takes some of those accounts. So I'm going to break down this video some of those things. So at the very top of the calculator, I kind of put a lot in here because it's a kind of a complicated thing. I'm trying to make it as simple as possible. Usually you fall into anytime you've owned a property for about a year or longer, it can be considered long-term capital gains versus just short-term capital gains. So we usually fall in the 0, 15, or 20% tax bracket as far as those go. And then there's another 3.8 Medicaid charge if you are some of the richest Americans. And the calculator kind of takes that into account. And if you put your income in there, it'll then tell you, and then that charge is based it off if it's capital gains or if it's your income level. But let's get into it. So if you scroll down on the left side of the calculator, you will see the inputs for the home, and then we will have your tax bracket, and if you're single and married, and then how much you're going to make from the sale of the home after everything, and then you can pick different states, and then you got your income, and then the NTI, and then you got your total taxable income, and then if it's a rental, then we can include that too. If it's not a rental, you can just kind of close that. Don't worry about that, part of it. But let's just start the calculator. So let's say we're going to be selling our home and it's our primary residence and we're selling it for $500,000, right? And so then it's going to ask you, well, when did you buy this home? And say we bought it 10 plus years ago and we bought it for $175,000. So, and then we're able to include our cost of selling the home, which will then reduce our proceeds, obviously, too. So, we at the Gifford Group, we say that about 7.5% is a good number to consider when you are selling the home. We do have, if you get a little bit more precise, you can go to, we have a seller's net sheet, and specifically designed for Texas, a whole nother video that I made for that about the seller's net sheet. You can check that video out. But just a hard, quick rule would be, hey, let's use 7.5. If you want to be more conservative, you could go up. And if you want to be, you think you can use a little less, you can go down. So we'll just leave it at 7.5. So that tells us, okay, we got $37,000 in costs associated with selling. So our pre-capital gains tax, before any improvements we get to take off too, because we do get to remove any improvements that we've made into the home. Now these are improvements, not like repairs, not, hey, I just fixed something that was broken, but money you actually put into the home. You put a new roof on, you added a studio, apartment in the back or something like that. You added a garage, and we have a whole list of things that are included as improvements. If you do scroll down a little bit here, and they go over those things too. So definitely something you want to check out there. So because you want to reduce your tax liability, right? So that's going to come off the top there. So it tells us, okay, here's our pre-tax, and here's our pre-tax, capital gains. And now we got to pick our tax bracket. Now, most Americans fall in the 15% tax bracket, and those are included here. Here's 2022, and then obviously we're in 2023 already. So you can see that if you make over $44,000 if you're single, and then 44 to almost $500,000 is the 15%. So pretty large bracket there for most of Americans. Going to fall in that 15% tax bracket. And married, you're at 89 to 550 right there. So like I say, most people will probably fall in that tax bracket. So that's why I defaulted to. Now, the cool thing is if you owned a home and you lived in it into primary residence, you live in the last 2 of the 5, you get a $250,000 exclusion if you are single, and a $500,000 exclusion if you're married. So if you're married, so we can see right away we're left at a single. Okay, so we took off our 250. All right, with 7,500, would be our tax, and then that's at 15%. So then it's $1,100 that we would owe when we sold the home. This scenario, if we were married, we actually get a $500,000 exclusion, and we don't actually have zero capital gains on our primary residence sale. So that's the cool thing about that. Now, if you're in California or some other states, or you have a large home and it's worth a lot of money, you'll obviously end up paying those taxes. Now, I did add widowed in here recently too. That's kind of a new change. The reason I included widow, it's actually assumes you're like, we're married, but your husband, or spouse passed away in the last 2 years, and there's some did put some things that got to happen. I put those down there too. So you can't be remarried, and it's been less than 2 years, so can't wait 10 years and still get the exclusion. You'd just be single at that point. But
like and subscribe.
You can see that it makes a difference, whether you're married or not. So now I did add this part of it too, which is I wanted to. It's not really included in your capital gains calculation, but it's at least nice to know, like, hey, well, how much money I'm actually walking away once I sell the home. Just want to jump in real quick. I did notice my other video I was recording, I forgot to include the proceeds after capital gains. So I went ahead and added that box in there so that if you do owe capital gains, it will include your net proceeds after your capital gains. So I just wanted to add that into the video. Thanks. Pick your state. So if you, and I just kind of put some default ones in here too, just in case. But most states, I kind of put what the tax rates are in there for you. Obviously, I can't guarantee these are correct, but these are the latest information I have. But so you can see, let's pick Oklahoma, and then it's going to tell you what our capital gains from, that are due. So, like I say, we did include the net investment income tax as well. But really, you're gonna have to put in your income to see. Now, it's really high. Most people would have to pay it. So if you're single, you got to make over $200,000, and so it's only people that are in the high income tax brackets, anyways. Usually, you can choose. You can choose what it is. Hey, I'm single and I make over 200. I'm married, I make over 250, or I'm, separated, or, married, but filing separately, had a household, or widow. So you can pick in what you're, okay, if I'm single, okay. So it's going to say, oh, I do owe the extra net investment income tax, which is 3.8%. And it's going to be the higher of your income or of your taxes due from the sale of the home. So it'll pick whichever one's higher and then tell you that, and that number there will be the outcome. And then, this also tells you, hey, what your total is. So like taking all your income taxes, you got your 1,200 here, you got your 1,100 here, plus you got your 1,900 here. So, okay, so now we get our total estimated here, and then this is with your income obviously over here too. So this includes your income taxes. So the income tax calculator is based off of 2023 too. So you can check off if, I do have that, I'm going to take the deduction. So it's going to, obviously if you're filing your own taxes, you might have more than, you might not be taking a standard deduction. You might be doing those other complicated things, which I can't account for, but at least wanted to include, hey, I'm just going to take a standard deduction in there for you, which then reduces your income tax there. Which is then reflected. So this is your total tax bill, not just your capital gains tax in this situation here. This is your total, capital gains tax over here. So hopefully you found this video helpful. I will do a separate video just on if you are having a rental, and we'll have a rental depreciation, and I'll jump on that whole nother thing, but I just wanted to leave this video. It's pretty long already, so we'll have another whole video on that. So thanks so much for watching.